How many times have you found yourself in a breakout or breakdown only for price to come back in and take you out? In this video, we're going to be covering how to identify these trap participants in the market using order flow tools such as footprint charts and the depth of market. Whether that is trap shorts or trap longs on either side, the most important aspect before even considering to look at order flow, or as I like to call it, under the hood of these trap participants, is to first identify the price area of interest first. So let's jump right in. Before we can identify where these trap traders are, first we need to identify where they may get caught off sides. This is a critical element here. In this example, we'll be using the SPX futures, but you can apply this to any other asset that has a decentralized ledger. I prefer to do a top-down analysis using volume profile from the 2-hour to the 30-minute zones. So let's break that down. We're going to be identifying high volume nodes. Now, think of these bigger profiles that are highlighted here as having a gravitational pull on price. Price will have a tendency to come into these areas and trade for long periods of time before coming out of this basis build. And these other highlighted areas will be low volume nodes. These are areas where price moved away or through very quickly by their very nature. Low volume transacted during that period of time between those thicker profiles. Think of these areas as having two magnets with the same polarity. They push price away from these areas relatively quickly. This is going to be a key component to identifying where you should be looking for trapped participants. So just to clarify, this is the 30-minute time frame. I've highlighted the low volume nodes here on the 30-minute. I'm going to jump into the 2-hour and we're going to see where they overlap, and then those will be our critical zones of areas of interest for the coming week to try to find transactions or trap traders in. Now we've made it up to our 2-hour time frame, and you can see that those same levels in the 30-minute coincide with the same volume nodes on relatively the same profile. The only difference is this is the point of control. This was going to be a critical level that I'll be looking for into next week. So I'm going to highlight that a little different than I would the other two profiles, just to give myself reference when I'm looking at these areas of interest, that the point of control coincides with the 2-hour with the low volume node on the 30-minute time frame. Now that we've identified these areas of interest, these will change from day to day as the auction or the volume transacts. So just keep in mind these levels get refreshed every single day depending on the movements of the market. These imbalances will change over time. But now that we've identified these areas of interest, the real work begins. Let's get under the hood and look at order flow. Really quickly, before I jump into the example I'm going to be covering using footprint chart, which is just an tool of order flow, I'm going to be showing you the candlestick chart that is the same as the footprint I'm going to show. The reason is this is the same price action that we saw, and this is one of the low volume nodes that we covered just briefly prior to getting to this section on the video. The key here is identifying trap participants in an area, not the exact level, right? But an area of interest to be watching orders coming through the book. Because essentially what happened here is buyers were attempting to break price out of this area, out of a breakout. So essentially what happened is they got trapped here and there was no follow through, thus capitulating and creating this windfall. This is what you would call trap buyers, so TB. Trap buyers form when aggressive bids sweep the market in an attempt to break price out of a resistance area into new highs or out of balance. We're going to do a side-by-side comparison here. This candlestick chart here, it's exactly the same formation of this footprint chart we have. Okay, they're exactly identical. So 3607, same price, 3607, 2811, 2811. The only difference is you're looking inside or under the hood of each candle that is printing. So each candle that's inside, these are all the orders that filled at the market inside there. So we're looking under the hood of all these, and this is very important. So let's break down the very nature of failed breakouts in this example, and I'm going to cover the next segment, a failed breakdown. By the nature of that, a failed breakout is the attempt of bullish price action attempting to break price out of a resistance area, hence the zone, the volume node highlighted. Bulls attempting to do so at a certain price. Okay, price is the most important factor involved in identifying these areas for trap buying or trap selling. So as price was dividing coming into an area of a breakout, price should be accelerating. We should see quick movement. Okay, the pace of the DOM, the pace of the footprint or the candle, the bodies of the candles if you're a technical trader, should be relatively strong or big or with velocity. Okay, Velocity is the second most important factor when identifying trap buying or selling. You want to have confidence. Velocity is linked to confidence in participants. In this case, confidence in buyers attempting to break price. The next thing is going to be volume. Volume is key. The amount of transactions happening here above the breakout price were substantially great. These were big transactions you normally won't get during any given candle print. On average, these transactions were above normal. And why this is important is simply because the bigger the volume, the more the participants. The more the participants, the bigger the move in the other direction. Or if they were to break out in the opposite direction. Okay? So all these things are part of a formula and they all come together. So they're very critical. So make sure that these three metrics you're using prior to identifying these trapped areas. Now the next few elements I'm going to be covering are unfortunately only going to be seen if you have the depth of market, or the DOM as most order flow traders call it. This is something that you can join me, so make sure you subscribe if you want to have more. I do this free, live Monday through Friday. I show my DOM, I explain and walk through every single trade, showing absorption and hold and an aggression take place. I'm going to briefly cover those, but unfortunately, the nature of the video, I cannot show you absorption take place. I'll link a video in the description below of where I took this trade, how I called this trade, and how I walked you through it. So if you want to watch a live example of me doing so, I'll leave that in the description for you guys. So as this price is unraveling and you're getting this volume transact, you're going to see what's called absorption. Absorption, in other words, is simply price stalls. Okay, price will stall, and if you were watching this live with me, you would have been able to see that price stalled within these 2-point spread. It was between 34 and 36. So about 36 through 34, the very same area where all these orders got filled. Okay, price was stalling within here for a period of time. This hold can go both ways when you're heading into an area like we are now. The most important thing that can give you headwind as to what's essentially happening is you're seeing the order blocks come in, and all the sellers are willing to meet all the buying pressure taking place. You're also having trap buyers get stuck up here as they attempt to break. These highlighted numbers are buy imbalances. In other words, aggression of bids taking over, trying to break price out of a resistance area or further upside. As price holds, anybody who transacted here becomes a stuck trader. Okay, this is where stuck traders are no longer being rewarded for price moving in their favor, and they are subject to getting stopped out as trend starts to reverse. And sellers know this. So as sellers start to absorb price and hold, right, hold price here within a small range, they will then attempt to hit the offer or sell the market aggressively. And you saw that come through here. These sell orders coming through on the left column as opposed to the right. These right ones are bullish active market orders coming in, aggressive bids, and these are aggressive offers. These sellers are attempting to hold price below where they absorbed all the volume coming through the market. And they now have an incentive to hold price below this zone. Okay, so the way you would trade this, you simply would identify the zone, let price come back into the zone, in this case this little box, and on the retest, if you see more absorption or price hold below, you simply enter there. Okay, you enter right at the below that base, and you should aim for a stop any break above that area. And as long as sellers do their job and hold price lower, they will attempt to take out bulls stops that are located at the high end of this stuck area. Right, they're going to capitulate the bulls here, and typically the bulls have a swing, the last swing high. That is where they have their stops. And as you can see here, price skipped. If you were watching this live, you would have seen price skip, hold below. Sellers participate more with more further downside. They absorb price more below the stops, which then further accelerates price even lower and lower. And I walk you through this, but essentially those are all the elements that take place within a trap buyer environment, and the inverse will be true to a trap seller. So I'm going to cover that next. Now, inversely to trap buying, we're going to be covering trap selling. And this all took within the same session we were just covering. So this was a sell-off we had from 36 Sellers got aggressive on the way down from the sell in 36 and they got trapped. And I was able to capture the same trade as well. So the same applies. This is going to be the same chart, price action here, as we're seeing in this area here. Same price action, we're just simply looking at the transactions that came through, every single candle that printed, all within the same time frame. 5 minutes each candle, 5 minutes each footprint. The same concept is important here. You had these areas of interest, again, areas, not price, areas of interest within price. And we were heading into that zone. And what I'm looking at is first, as we head into that zone, what's the pace? As you can see here, there's huge amounts of selling taking place as we're heading into this area. Key element here, going into an area to trap, and also velocity, the speed of which we got here. We dropped about 30 points heading into the 800 zone. Okay, that gave me an inclination that there might be some aggressive selling taking place here. And as I'm assuming that, I'm also watching the footprints. You can see the sell imbalances take place, these highlighted numbers, as we're heading lower and lower. Okay, those things are all coming through. And then the final element, velocity covered here. We got price coming into the area, right? Now we got volume. What's volume look like? Well, you got a big volume node here, right at the area. So this 804 through 802 coincides with this little area here, right? And what happened right after that little area covered? Well, we had a nice move up. You see that? So as we got volume into an area of interest, what happened? Well, you can guess. Price got absorbed. Very similar concept to what we saw in the previous example at 36. Price absorbed within a small zone. All the selling that was getting aggressive, you finally saw the buyers willing to meet all the sellers at an area of interest, a support area, while sellers were getting aggressive, right? And they had time, velocity. They ended up getting absorbed, so they got trapped here. This was the trap area where they couldn't break price any further. Then you have the sweep. This is considered aggressive buying taking place, or bids hitting the market at market and driving price back above. These are the same elements as we saw in the trap selling environment, where buyers then reversed the market, took price higher, and as these candles or footprints were developing, they were forming imbalances. At this point, you don't see them, but they were buying the market, trying to push price above and take stops along the way. So how do you trade these, right? How do you identify how to enter this area? Because that's important. You can now that you can identify them, how do you trade them? The most important thing is, if you want to be risk averse, you want to see price enter and then reclaim the zone. So in this case, 805 was the zone where the selling before it got absorbed, right? So absorption took place here. What you'd want to see if you want to be a risk adverse trader is get in on the reclaim above that absorption. So in this case, 805, and you want to place your stop below where the low, that previous low was. Okay, that would invalidate the absorption that took place. And then the next thing you want to see is just buyers get aggressive and start to take stops on all those late sellers that got stuck down here. So from here, quickly, you can see that price moved 10 handles or 10 points right off the level. So from 805 to 815 within a few minutes. This is, each one is 5-minute print. So you got 15 minutes, you got 10 points of upside. Okay. Now, if you guys want to watch this live, I'm going to put the video in the description below for you guys to review the footage from today's price action, which covers these two elements here, trap buying and trap selling, all within one session. And I even put chapters in there for you. So if you guys want to review that, watch me walk you through it live with my mindset, what I'm looking at, how I'm entering a positioning, managing it within it. Feel free to subscribe. Join me live if you have more questions, and I'll see you on the next one.